You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
And welcome back to the option block. Who's this talking? It's your favorite guy in the world. Gee golly, good old Mark Sebastian. I am filling in for Mark Longo, our normal host, as he is in California enjoying the beautiful California weather while we're here in Chicago enjoying the beautiful Chicago rain. And with me on the all-star panel, if you really want to call it an all-star panel, I think that's wrong. I think it's more of an all-star duo today. It's going to be our friend, my friend, the one, the only, Michael Tussaw. How you doing, Mike?
Always good to be here. I'm sorry to hear about the rain in Chicago. We got blue skies and sunny weather here in St. Charles.
It's a nice thing when you're in a different state.
A different state. Got it. State of mind, yes. State of geographical boundary, unfortunately, no.
No. You get the same financial mess we have.
Yes.
Yeah. So the weather's out there. You know, it actually did turn nice. It was really rain. We got a ton of rain last night. But
yeah, we did too.
Yeah, my backyard is a little bit floody today, if you will. But enough about the weather and the beautifulness that is the Chicago suburbs, and let's roll into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
And welcome to the trading block. As you know, this is where we're going to talk about what happened today. And Mike, what did we had the S&P go down as much as 10 and open up as much as 10 before settling down 0.35 cents on a $2,604 index. So call that 0.02%. We had the Russell, which was the big mover and shaker, down $5, a little more than 4.5%, or 0.45%. The Nasdaq down 3.36%, and the Dow Jones Industrial Average was the breadwinner today, ending up green by 9.4 points, a whopping 0.05%. The VIX index down 0.33 to 1436, and oil was also what was oil? Oil was up, and there you have it. So, Mike, what were you watching in the markets today?
Well, in looking at it, it's one of those days where I wish I was a day trader. We had sellers just right off the opening bell today. I mean, it just sold off hardcore. Mm-hmm. Bottomed out around 11 o'clock today. Still didn't quite finish on its highs, but still it was it was one of the exciting roads to nowhere type of thing.
Yeah, quite the midday turnaround. It was we were kind of hit our lows during the European close, into the European close. Then kind of this afternoon, things recovered. Now, here's where I did see some ugliness. Apple. One of the main reasons we were down as much as we were, and one of the major drivers, I think, of today was the fact that Apple got absolutely hammered yet again, breaking $90 for the first time. I mean, when was the last time Apple traded $90? Split adjusted. Even
it's been at least it's a new 52. The 52-week low going into today was 91.85, and we went below 90 today. I mean, this is, I'd like to start buying Apple at this point, and just a small amount of it. I still think it's a great company, but at some point they're going to innovate something. I like to think that anyway, but
yeah,
I don't know.
This is the post-split low, Mike. Or touch the post if it wasn't a close. So we're talking almost 2 years it's been this inexpensive, which is fascinating. Interestingly, not a lot of activity options, Mike. Just kind of a little bit of a blip in volatility. But as the stock is selling off, it's a lot of who cares, which I think is a little shocking. And Apple is no longer the most valuable company in the world. What do you think about that? They were surpassed by Google now.
Not surprising. I mean, it just goes back to what we beat this horse to death on the show. The reason Apple went up in the first place is because they were innovative. They were the first. They were the ones that said, yes, this iPad thing, you're also going to need that in addition to your iPhone. The world said, no, we won't. Apple said, yes, you will. And Apple was right. And they were very innovative. And until they did that they started with the iPod many, many, many years ago. Then eventually it evolved into the iPhone, now the iPad. But the iWatch was just kind of something that Apple didn't even think that was going to be that big of a hit. And until they invent the next big, you really need this type of thing, it's going to be just a very flat stock, I believe, and it might even be a flat at lower levels than it is now.
And really, the iPad business they're getting creamed in their iPad business. The iPad has been kind of gutted, and Microsoft really did kind of finally figure out how to kill the iPad with the Surface Pro that could replace the laptop. And the other problem is iPads are kind of too well made. And so, anybody who wants an iPad has one. And anybody that is thinking tablet for power computing is getting the Surface or an inexpensive laptop. It just, while PC sales are also down, it's not like there's anything special about the iPad at this point. It's really created a problem for them. And I don't know where they're going to innovate. The watch is terrible. And do we really need another Apple car? I mean, we've got Tesla, we got Fisker, we got Google. Everybody's working on a car. I don't see it. I simply don't see a huge out for Apple. I mean, they're a little bit of a utility, an income stock. They're not that exciting.
I think at this stage, I like them as like a small little trade, but overall on the macro level, I'm probably 5% as excited about Apple as I was back in the day.
No, it does. The feeling down the leg is gone. And now here's, this is maybe not an odd block thing. Retail absolutely slammed yet again today. Look at an XRT, it was down, but if you look at Kohl's stores, I mean, they got murdered today. And maybe a little bit of positiveness out of Ralph Lauren. And right now we actually do have JWN Nordstrom earnings. Nordstrom is down over 10% on their earnings right now, Mike. There is just absolute carnage in retail, and the winner, everybody seems to think the winner is Amazon, and they may be right. Amazon may finally be gutting these the retail space to the point where it's mall traffic is down. I was commenting about this, and let me know what you think of this, Mike. I went to my wife runs a fashion blog, bigblondehair.com. and she gets invited to all sorts of, store events and things like that. And so we got invited to like a Neiman Marcus spring premiere, and we go to the store. There's like food. It's very nice. It's fancy. Fancy. Can you hear my Chicago accent there? Fancy.
Hot dog.
Yeah, fancy. And Lauren, we walk. There's all these beautiful shoes and clothing and stuff. And Lauren walks around and says, this is a woman who is a professional clothing picker-outer, and she goes, there's just no selection here relative to what they have, what Neiman Marcus has online. And I think that and now Lauren, who used to really like to go to the mall, all she does is buy her clothes online. And it's pretty fascinating that, we may finally, it took 20 years, but the online retailers and online experience may finally have kind of taken down the mall space. And I don't know that I would want to own mall real estate or anything along those lines. Are there any retail stocks that you look at and say, I like this right now, Mike?
Kind of. Here's to add to your point. Walmart with retail, there's no question. Retail got the living tar beat out of it today. Look at Walmart. Walmart actually did okay today. Now you can make a case that Walmart's really kind of in a different class than retail, but here's what I think is interesting about Walmart. Walmart, in theory, is the ultimate Amazon competitor in terms of brick and mortar versus online.
Right.
Walmart has, in theory, the best deals online. Walmart has the best deals that are on a brick and mortar store, and Amazon, you're going to find the best deals online. I mean, there's always something better somewhere, but that's the way the public perceives it. So with that, Walmart's up today, but I thought this was interesting. Walmart says that they're really going to invest a lot within, they have some type of new online program coming out in an effort to compete with Amazon. And if Walmart is pushing to get more online, I think that's definitely a step towards the point with which you make. Now, is retail dead right now? I can tell you right now, the Charlestown Mall in St. Charles, I can remember when I was in high school, that place was hopping. Right now, there's a Von Maur and a Kohl's, and the Kohl's is even closing in there pretty soon. So it's a ghost town. So in my neck of the woods, for sure, malls are dead. And St. Charles is a hopping town. We have a lot of other things. As you guys have heard on this show many, many times.
Yeah. But an interesting thing is this may actually be a boon to the small downtown store in that when, rather than going on these big trips, if people need something quickly, they'll run downtown into little downtown St. Charles, downtown Riverside, wherever you may live. And, you'll still have big shopping areas in the cities, but maybe that's it. I mean, it's really interesting the way things are changing.
It is, and the mall seems like the inside mall seems to be going the way of the physical newspaper.
It does, although I still like outdoor malls a lot, I'll say.
Yeah, because just to add to your point too, in Geneva Commons, that's actually very big. That's the next town over from St. Charles. Geneva Commons, that's hopping.
Yeah, there you have it.
But it's something about like the indoor mall. Who populated back when we were kids? People of our age group populated the indoor malls, whereas now that's not the case anymore. Kids are smart enough to buy on Amazon these days, and so I think that it just it's changing of the times.
All right, now final note, Mike. I don't know if you saw what happened in Monsanto today. Did you see Monsanto's pre and post market open move?
I did see that for sure.
Now, I don't know about you, but if you knew Monsanto might be the subject of a takeover rumor, do you think it would be a good idea or a bad idea to buy a ton of the May expiring on Friday 100 calls?
Well, normally I don't do that, but today RCM we put about $400 million into the call options for this Friday because we just had a hunch.
Yeah, yesterday. Yeah, or would you buy the 95 calls?
Just kidding. Any regulators that are listening?
The 95 calls. Would you buy the 95 calls? Would you buy the 93 calls? Because some genius who figured out what was going on, basically decided, hey, I'm just going to buy a bunch of calls that expire this week and make a bunch of money. Now, my guess is if his account hasn't been frozen already by the regulators, it's been frozen by his clearing firm. But this is one of the most blatantly obvious forms and set of cheating I've seen in – I mean, this guy was even more blatant than the Hines guy from a couple years back. I mean, this was just buying calls that expired this Friday. It was like ludicrously blatant, and my guess is he's going to jail, whoever this person is. I don't know. What do you think of action like that?
I think that's one to where it's like trying to rob a bank in broad daylight and not even putting on a ski mask and just walking by cops and telling the police, I just robbed this bank.
Exactly. Now, I'll tell you what was nice, though, for me. I saw that activity yesterday, and so I bought a 95 par call spread for 15 cents. And then I sold it at like $4.50 today. That is fun. It was fun. So that was a nice little return for that's not a bad return on a 15 cent purchase.
Not at all. Congratulations.
That's the kind of cheating odd block that we really don't like. Now, sometimes there's some smart people that think things are going to move, but rarely in an odd block is it that in an odd trade is it that blatant. And
yeah, this was someone that didn't know anything about options and then just
thought, I'm going to cheat.
Yeah. How are they going to figure this out?
Yeah. Well, let me give everybody one tip. If you're going to cheat, and Mike, I've said this before. Mike, if you want to cheat and you don't want to get caught, let's just say, or you wanted a lesser chance of getting caught, how would you cheat? I know you've heard me say this before.
I would definitely not be buying front week calls out of the money the day before a big move was going to come. So I would say step one, do anything but that. I'll even rephrase your question. If I'm trying to purposely get caught cheating, I would do what this guy did.
Yes, that's true. That's a brilliant way. So here's what I would do. I would sell puts. I would sell at the money puts, in the money puts, things like that. Why? Because market makers hedge those off. And they hedge it off with a lot of stock, converting them into calls. So when they go out worthless, you keep the premium, and the market makers make a bunch of money, and they don't turn you in or complain. That if you're going to cheat, that's the way to cheat, folks. Not saying you should, but if you're gonna, do it that way.
How to cheat, the title of this episode.
That is the title of this episode, How to Cheat. So with that discussion on odd flow and odd behavior, I think that's a perfect transition for out of the trading block and into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
And welcome to the Odd Block. Here's where I'm going to run down some interesting trades that we saw today, and we'll talk about them. So, trade one, JNK. You deal in the junk bond ETFs ever, Michael?
I have not dealt with JNK or HYLD in many moves.
Yes, it's an interesting. It's the Spider Barclay Capital High Yield Bond ETF, and it's trading around $35. And a trader came in and bought 31,250 of the June 35 calls, likely opening, paying 30 cents. That's about 10x its volume in one trade. It was opening, and this guy did it tied up to some stock. So essentially he was tied up to stock. He was kind of trading as a volatility trade, trading for some movement away from $35. So when you buy an at-the-money call and then you buy and you sell stock against it, you're basically creating a straddle. This guy is making a serious bet on an increase in volatility with a small preference that JNK goes higher. What do you think about J&K vol. Mike, you a big buyer?
Well, what's going to be, it's hard to say because J&K is in a different world than like a TLT or an IEF in that if it's crap, it's going to continue to be crap no matter what the Fed does.
Right.
And so how crappy is the crap right now is the question with which I think is even more of an issue than what we're going to be doing with interest rates. Now, interest rates are definitely going to affect bonds in some way, shape, or form, but J&K has had a heck of a run lately.
Yeah.
Early February.
Yeah.
But it's longer term, it's still down. I'm looking at a 20-year chart on it. Not 20-year chart. It's topped out around the 40 level. It's kind of had that top over the course of the last 5-6 years, but it's still down about 20% from that. And the question becomes, is this a kind of a little dead cat bounce that it's been having since February, or is this just a little bit of an opportunity to go short it? I'm more of the school of thought that I'd rather, if I had a gun to my head, I'd rather be short than long J&K. So with volatility doing what it's doing, I think that if J&K goes down, I could see it going down rather quickly. So my preference would be to the downside. Thus, I would rather be a buyer of vol than a seller.
Yeah, I agree with this guy.
Given the choice.
I'm with you, 100% on that. I like it a lot. Next unusual trade I saw was JD.com Inc. They're kind of like the Amazon for China, right? Or something like that?
Yeah, they're an ADR, so that would make sense.
Yeah, they're definitely Chinese. I don't know what they are, but they're something. And so we had a customer buy in 2018. So the stocks had a kind of a rough go of it, down about 22 and a quarter. We had a customer come in, and there was a lot of open interest, but I think this was opening anyway. They bought the Jan 2018 45 calls, and they paid 75 cents. So these are about 100% out of the money. In addition, they also bought, and these are definitely an open, the Jan 2018 30 calls. I was wondering whether it might be like a ratio trade or something like that, but I think it was just some players levering and buying a lot of paper in JD.com and longer term stuff so that the stock has time to recover, if you will. I don't know. This doesn't sound like this is one you look at a bunch, Mike.
No, this is definitely not on the radar by any means. And, the trade itself, I can see where they're coming from. If you're really bullish on this stock and you believe that over the course of the next year or so it is going to go to 40, 45, which is not out of the question.
No.
I know absolutely nothing about this stock. Then I wouldn't have a problem doing that. Reason being is that they're given it over a year and a half to actually do what it's supposed to do.
Right.
But if it doesn't do it soon, you can't hold on to that premium for a long time.
So in the last 2 years, this stock has been as high as about $39. So, and as recently as like December, it was over 30. So, certainly a play on some sort of reversion to maybe going a little higher here. All right, and the last trade, this is one that I know you are familiar with. I'll just give you a hint, and you guess the stock. Brown Truck.
Brown Truck. I will go with FedEx. Oh, wait, no, UPS.
Correct. It is UPS, United Parcel Service. And I think you're going to like this one, Mike. Maybe a little bit of hedge, maybe a straight vol play. A trader came in and sold 24,300 of the May par puts. Stock's around 102. And then they bought 24,300 of the June par puts, paying a net total of 93 cents on the calendar spread. Now, at first I thought it might be a roll, but it looked like it was opening on both ends. There's not a lot of open interest on the May pars. So I think this is a straight calendar spread. Somebody that's looking to take advantage or to kind of get their hands on the June pars somewhat inexpensively would be my guess.
No, I would agree with that. Just because of the fact that they had earnings They had earnings. What is it showing right here? was the date? On the 28th of April. So earnings are gone. So apparently this person feels that there's not going to be any huge movement between now and May expiration. So I could definitely see that.
Yeah.
And if it were to start to go higher or lower, beauty of a calendar spread is that it's hard to really, if you know what you're doing, you might not make a lot of money on them, but it's a lot easier to not blow out your account on them.
It really is a lot easier to not blow out your account on those. One interesting. I mean, the ADV on this thing is only about 13,000. So, I mean, for how well known this company is, it doesn't do that much option volume. And I have the stock worth, I have this trade on its own doing 4x of the ADV. So this is a serious vol play in UPS. I'll be really interested to see whether they're able to do something with this.
Yeah, for sure.
All right. And with that, I think that's all I've got on the odd block. And we'll roll out of the odd block and into around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, and obviously, Around the Block is a section of the show where we say, "Hey, this might happen." So, Mike, what are you watching for between now and our next recording, which is Monday?
Chicago Bears start their mini camp tomorrow,
Nice.
So we'll see how the Bears are looking for this year. I thought they had a really good draft. Not that I'm a Bear fan by any means, but you got to please the local people, of course.
Did you like their draft? You like that guy they picked?
I thought they did a good job all around. I thought they had some good off-season acquisitions as well.
Yeah, I like the Trevathan thing a lot.
I think the Bears are gonna be okay this year, and all of the Bear fans, it's in the bylaws of the Bear fan that you have to hate Jay Cutler, but that's just part of the rules, I guess.
Yep. So it is part of the rules. Yeah, I think they're gonna be okay. Although I'm pretty much, I think most of Chicago is paying attention to the Cubs and the White Sox. Now, are you a Cubs fan at least?
Yeah, I mean, I'm not too much of a baseball fan, but I guess given the choice, I used to be a Cub fan, but ever since the Steve Bartman thing, I kind of abandoned the team because I thought the fans gave him a raw deal.
They did give him a raw deal. That was not fair.
So that's why I have a hard time cheering for such an organization. But normally I'm a forgiving
you know what?
guy.
Any fan base,
sports, I don't forgive easily.
Any fan base would have given him garbage, though. I mean, can you imagine if that was the New York Yankees?
Oh, that would be.
That'd be terrible.
If he was smart, I wish I would have been him. The first phone call I would have made would have been to Vince McMahon. I'd have gotten into the WWE.
Oh yeah.
Ultimate Chicago villain, and I'd have made millions.
Oh, I mean,
off of it.
If he ever decides to write a book, he'll get a ton of dough for it.
Totally. But anyway, getting back on topic, I want to see if Gold's been kind of puttering around, or GLD's been puttering around the 120 mark or a little bit above it. Curious to see if it actually does something. It's kind of becoming, GLD 120 is kind of becoming the SPY 205.
Yeah.
It seems like it goes back to that number. So I want to see that. And I want to see if Apple can hold 90 tomorrow. I mean, that's a pretty number to hold. So those are the things that I'm watching for sure.
Yeah, me too, Apple. I mean, I thought today Apple would rally a little bit more, but it looked really soft into the close, pulled the whole market down, closed 90.34. I think it may get a dead cat tomorrow, and then I think we see it blank on 90 sometime next week, probably while the rest of the market's going higher. I'm going to be watching to see what happens with this Monsanto guy, and I don't think we've got a lot of economic data coming up. Let me take a look here. Economic calendar. Tomorrow, you know what we got? Tomorrow's retail sales. That'll be interesting. You got PPI, business inventory. So you got some decent. You got the Baker Hughes rig count, and John Williams, the Fed governor, speaks. So that's interesting. And then on next week on Monday. You got the Empire State Manufacturing and Housing Index. So you got a few things coming up. Nothing crazy. But we do head into standard options expiration this next week, and that has been like the big monthly options. And those have been pretty busy weeks and those have been bullish weeks over the last 6 months. So I'm looking for the market to rally. What do you think? You think we're going to see north of 2,100 or south of 2,000 first, Mike?
Heck, I think it's just going to be 2050. It's been 2050 for 2 years. What the heck? Let's just stay at 2050. I'm going to say I would be a straddle seller this week.
I like it.
If we're playing the guessing game, I'm selling straddles.
I would be a straddle buyer. I think we're going to go to 2,100.
Well, if not, then we'll go back to 2050 the next week.
Yeah, exactly. We absolutely
It's never going to go beyond. It's going to stay at 2050 forever. Never change.
Well, we're in what I call time correction, Mike. And that's where the market made a nice rally, but now needs to sit here, consolidate, figure out where it actually belongs before it moves up or down anymore.
I would agree with that.
So that's what I'm looking for. All right, and what's going on at RCM Wealth Advisors and RCM Access and RCM Futures?
All that fun stuff. Well, folks, if you are interested in trading under the RCM umbrella at TD Ameritrade or Interactive Brokers, give me a call. We can provide you advice on trading if you so desire. And our commission rate, because we have a lot of volume, is 35 cents per contract at TD and 25 cents a contract plus exchange fees at IB, if that's something with which any trader is interested in. Feel free to give me a call. We do charge a small fee for that, but 99% of the time, it is worth it. And if not, then it's not. I'll tell you, it won't make sense for you.
Indeed.
My number is 312-212-3531, or send me an email at mtusaw@rcmfs.com.
And check out at Option Pitch, we're going to be doing our next webinar is going to be early June. Our next Saturday class is going to be on condors and butterflies. I'll probably be setting up a free webinar next Thursday, so keep your eyes out for that. And go visit our blog, www.optionpit.com/blog. We've been writing some pretty awesome stuff, and we'd really like to see you reading our stuff every day. Go to optionpit.com. And with that, another great show, a little shorter today, but we had another great show, and we're looking forward to seeing you here next time on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.